Welcome to the B.F. Anderson Technical Report for February 11th. Let's get right into the charts. Got a lot to cover. As you can see, NASDAQ continues an uptrend, making new highs. This is a bull market. We've got a very healthy moving average situation here. The trend is up. NASDAQ looks good. If we look at it on a weekly basis, you can see the 35-week continues in an uptrend, actually broke to a new high. Very positive. This does look like a bull market. Here we have the 10-20, which is a monthly calculation where we're looking at the month of February here. So far, S&P 500 new high, golden cross, looks very uptrending. NASDAQ, same thing. We've got a golden cross making new highs, looks very positive. Here we have China. China has really taken off here. You can see so far this month, it's had a tremendous rally. Keep an eye on China. Now, on the aggression index, where we're comparing the NASDAQ to consumer staples on a daily basis, looks constructive. The indicator is positive because as long as we stay above that 40-week moving average, everything is good on the aggression index. So far, so good. On the net new highs on the New York Stock Exchange, we're seeing a good surge there in new highs. In fact, it's the highest reading we've gotten in quite a while. You can see that the 10-day moving average on the net new highs has turned up. Looks very positive. The index itself in an uptrend, very positive. Now, on the new lows, no problem whatsoever. We're not seeing a lot of new lows in the market. Very constructive. Here we have the S&P 500 on a daily basis where we're looking at the 25 and 50-day moving average. We got down here, pulled back to that lower moving average, held very, very firmly, rallied off of that, made a new high. Here we have the S&P 500 above the 200-day moving average. Now, I have not done the calculation, but I'm hearing that this is the widest margin between the 200-day and the S&P 500 ever in history. So we've got a lot of white space in here. A pullback, very possible. Here we have three economic indicators we're paying attention to. Now, I would say that if interest rates were to get above 1.2, 1.3, that would be very troubling because it would be probably indicating inflation. Here we have oil. Oil is moving up. You can see here the financials moving with interest rates moving up as well. Here we have the put-call ratio. Now, this is where we're measuring fear and greed. Now, you can see here back on March 23rd, which was the coronavirus fear cycle, we got way up here. Now, we've worked our way into greed. We're in a very elevated area in greed. However, the market continues to climb. So it's a secondary indicator, but we have a lot of greed. Not a good thing, but we just have to be patient and work with it. Here's the volatility index, which we're going to talk a little bit about. You can see the dramatic drop in the volatility index, ever since the GameStop situation. I'm pretty sure that's what drove it up here. And then it came all the way down here. So it's interesting to note the largest 4-day drops ever in the volatility index. Now, if you can see here, we have dropped 34.2% as of February the 4th. On the VIX, which is one of the highest drops in that 4-day period ever. So if you go out and then you say, okay, what happened after that? Well, on average, 1 month later, the market, meaning the S&P 500, was up 0.8, 3 months 2.6, 6 months 6.2, 12 months 11.3. So the drop in volatility is telling us the market may view this as a positive. Now, one other thing I wanted to talk about was the bond market. What is going to be the catalyst for the next bull market? What's going to drive us higher? For the last 10 years, out of the $3 trillion that people saved, 94% of that money went into the bond market, primarily bond funds, because these 401ks, everybody wants what's safe, so they get, pretty much brainwashed into the bond thing. So as a result, 94% of $3 trillion went into the bond market, which means that today that households are synthetically short stock. Now, this is by Tom Lee. Tom Lee also said, I think now some of that money is flowing into equities, and when money comes into equities, it really lifts all boats. So the catalyst could be that we're going to see a major transition here from asset allocation models that call for, say, 30% equities, 70% bonds, that going to 50% bonds, 50% equities. We'll just have to see, but this could be a major catalyst, and you can see the dollar amount that is out there. Now, just to kind of follow up on that thinking, what I've done is I've taken the S&P 500 index and I've compared it to the Vanguard long-term bond fund. So you can see here that for all of 19 and pretty much, and here's the March 23rd drop. So as the line goes down, it's saying that bonds are doing better than stocks. Well, that is all reversed and actually broke a trend line. So what I believe is happening here, this money, or these trillions of dollars, is starting to migrate out of bond funds into the stock market. Now, here's another thing to be aware of, as I wanted to mention, that oil and gas exploration and production is really kind of looks like it may have turned the corner here. This is a long-term graph going back a couple of years. You can see that energy has pretty much been in a downtrend. However, it's trying to reverse, and we're actually getting higher lows and getting higher highs. Energy is looking better. Now, this would be West Texas crude. You can see here that, that the price of the crude oil has broken above both of these moving averages. I would not say that this is a definite uptrend, but it's showing improvement. It looks like it could be a turnaround situation. Here's Exxon, just to show you the price of Exxon. It's moved up back above 50 after being really hammered down into the 30s. So oil is looking somewhat interesting. Here we have the Russell 2000. I'm going to talk about small cap stocks here. Here we have the Russell 2000 really making good progress. Now, what this graph is the Russell 2000 as a ratio to the S&P 500. So as the line goes up, the Russell 2000, meaning the small caps, are leading the S&P and outperforming the S&P. Now, this is the graph of the Russell itself here. Now, also, you have to realize what's happened here is, because I've taken also the same ratio, which is the S&P 500 compared to the small caps. The small caps are basically playing catch-up. You can see here that over a period of years, now I go back to 2007 here, you can see over an extended period of time, small cap stocks have had a tough time. Well, all of a sudden, they're starting to rally. Now, all they've done is basically catch up with the S&P 500. So it's not like they're too extended and have gone up too much. Now you can see here on the graph, this is the S&P kind of in an uptrend, which is great. But look at the uptrend on the small caps, really getting some momentum and velocity here. Keep an eye on the small caps. We're noticing with our portfolio, the market is driving us into small cap and mid cap stocks. Now, let's get into the top 5. Now, this is a large cap company. This is a company called Tapestry, which is involved in Coach purses and Kate Spade. And with the stimulus money, maybe people are going to buy more purses. So you can see here the 10-day is turned up. Stocks making new highs. Very positive trend. They announced earnings here where the volume went to 10 million shares. You got this major gap up in price. Tapestry looks good. We own the stock. Roku, good old favorite Roku. This is streaming video. Everybody's going to streaming. Everybody's cutting the cable. Roku makes the best equipment. You can see here kind of a gap up in earnings here. Well, we got a gap up in the price. Very constructive pattern. Here we have Pinduoduo, which is a Chinese retailer. Kind of an interesting situation with Pinduoduo. They have like a social networking page that links to the retail side. So everybody gets on there and talks about some new shoes or whatever they want to buy. And it's kind of interesting. But anyway, stock is in an uptrend, looks positive. Here we have Novavax, which is involved in the vaccine. You can see here major gap up in price. Rallied into an uptrend. However, today I would be a little cautious, pulled back a little bit too much for me, kind of looking a little toppy here, might have run a little bit too much too quickly, but I would keep an eye on it. So GrowGeneration, this is another stock that's in the marijuana industry. The way you look at GrowGeneration, it's like this. They're selling the picks and the shovels to the gold miners. These guys sell the equipment to people that want to grow marijuana either medically or commercially or for whatever reason. The point being is, it looks like to me that the market is discounting some type of legislation that could cause the cannabis product to be legal here in the United States. So all in all, that's it. Thank you very much. If you have any questions, give me a call.